All right, welcome back, everybody. This is John Mazzara with Remax Results. Today, I have the pleasure of interviewing an appraiser, Jodi, and a mortgage person, Karli, and I'm going to ask each of them to tell you a little bit about their background and their company and how you can reach them. We're going to talk about what's going on today in the real estate marketplace with regards to appraisals, valuations, pitfalls, all sorts of things. So, Jodi, would you like to introduce yourself first and tell us all about you?
Sure. My name's Jodi Bagenstoss. I have been an appraiser for 25 years. Our company, J R Appraisals, has been in business for going on 20 years this coming up year, which we're pretty excited about. We have 15 appraisers all over the metro area in Western Wisconsin. And it's been very interesting. We've went through the last ups and we've went through the lowest downs, and we're back in the ups here. And super busy, and it's been a lot of fun. Our office is based in Woodbury. However, our appraisers are not in Woodbury. They're all over the metro area, Cambridge, down south, out west, and several in Wisconsin. Our office number is 651-493-4820. My personal cell is 651-226-4787. And I welcome people calling, emailing questions, no matter if we are involved or not. My email address is Jodi, Jodi, at jrappraisals.com, all spelled out. And our website is www.jrappraisals.com.
Awesome. And Jodi, you do appraisals for mortgage companies like Karli's. You do them also, I believe, for attorneys or for individuals. So anybody that wants to get an appraisal could reach out to you, and
Absolutely.
You're certified to go to court and all that kind of stuff,
Yep.
right, with your company?
Yep, absolutely.
Okay, perfect. Karli, can you tell us a little bit about yourself, please?
Sure can. So Karli Spahr with Fairway Independent Mortgage. I've been in the mortgage industry for 24 years now, and work in predominantly Minnesota, but from Wisconsin, so still do a lot there too, as well as a few other states. And we focus on residential mortgages, single family up to 4 units, and we're based out of Oakdale, Minnesota, so we are in the East Metro, although we cover the entire state. So
Wonderful. And Karli, you have a lot of unique products, so you're not just a bread and butter FHA, VA conventional, just straight 30-year fixed type of mortgages. You have a lot of unique things that are specific to your company. I believe you're, if not, correct me if I'm wrong, I think you're like the biggest FHA originator, and you do renovation loans and doctor loans, and you do reverse mortgages. And even if you can't do the mortgage yourself, your company is nationwide, so you could hook somebody up with somebody in another state if your licensure didn't allow for it. You want to talk a little bit about some of those things really quick, kind of unique to yourself and your company?
Sure. So one thing, even though I've been doing it a long time, I still really take a lot of pride in working with first-time home buyers. I like the education piece and just walking them through the process. But we do have a variety of products, down payment assistance programs. So that would be for first-time buyers or move-up buyers. There's a gamut of things we can do there. I do renovation financing for all loan types, so FHA, conventional, VA. We also do physician lending, like you had talked about, and that's something I specialize in. And we have bank statement programs. There's so many different programs that I could list out there, but even if it's something our particular company doesn't do, we can broker out if needed to. Although we're not a broker, we have other opportunities available if needed.
Awesome. And before I get into, let's say, what's going on today in appraisals, I just want to ask Jodi a question with regards to your renovation loans. So an appraiser doing an appraisal based on a renovation, can you just kind of talk about how that would work with some of Karli's products? People might not be familiar. They want to do an addition or use the 203K, and how do you do both a current valuation versus a future valuation? How does that work?
So we would need everything in writing at what is going to be done. And sometimes it gets a little hairy when we have homeowners that say, we don't really know what we're going to do. It's based on how much money we can get. And it's kind of a chicken egg thing, but the appraiser needs a specific specs, drawing of, say it's an addition, they need a drawing and we need specific materials. And our valuation is based on what the value would be if that was completed the day we're there at the home. So then Karli would have a good example of what this house is going to be worth once it's completed. And then we'll go back to the lender and ask, do you need an as-is value? Also, do you need only subject to value, subject to the completion of their renovations? And that would be up to the lender specifically if they need both of those. Typically, they do need both of those, but we'll always ask the question. But we just need everything in writing, so we have exact specifics on what is going to be completed. And then once it's complete, we are asked to go back out and make sure it was completed exactly how we said it was going to be completed in the appraisal.
Awesome. So your company is very familiar with that type of loan. I know a lot of appraisers don't do that and a lot of lenders don't do that product, but you guys work together and get that done, or can get it done.
Yep.
Awesome. Okay, well, with regards to today and the crazy market that we're in, we have people, my clients, bidding anywhere from $30,000 to $50,000 over in order to win. Now, the market has subsided slightly, but it isn't and wasn't unusual to bid, 8 to 10 times and lose homes. In the process, I had a couple that went 9 times before they got it done. They ultimately did buy the home. They bid over, I think it was about 50,000 over, but it didn't appraise. It appraised for about 35,000 over. So now we had a $15,000 valuation difference. And the way that particular transaction worked itself out is the seller agreed to reduce because the buyer didn't have the ability to bring a lot of additional cash. So we had about $8,000 we could bring additional, which we did, and then the sellers reduced by the other amount to make the transaction go. But and I know appraisal is retrospective versus prospective, but can you explain with regards, Jodi, to how crazy this market is and how you try to adjust to valuations that are in offers that are over list and yet keep the transaction together and justify that valuation today? Can you talk to that a little?
Well, we have to justify it. It's not just hey, the market's crazy and the property is worth more. We have to bring specific data into the report, and it's retrospectively, and we have to find exact sales. Say, I guess the way to kind of dumb it down is if you had a townhome development and all properties are the same, you go back a year and you have to show percentages. These homes are going up in value this many percent. So we can add on what we call a time adjustment. And a lot of our sales, they're over, our valuations over all the sales we have in the report, if we are able to prove with specific data. And the lenders don't, it's not really the lenders, I guess our guidelines don't really allow for us to take all of the properties in the area and make an adjustment. Our data has to be specific to that property. If it's a 2-bedroom townhome, our data has to take into account 2-bedroom townhomes in that market. We're not looking at $500,000 homes when we're comparing it to when our home's in the $200,000 range. So it has to be specific to that kind of property. It's because I know we get a lot of data thrown at us from real estate agents of just reports from the MLS, but we have to really go back to what is comparable to this home and how that market is. The townhome market might be different than the multi-million-dollar luxury homes, or if it's a lakefront home, specific lakefront homes go into that data. It's just not all of the data in the area. It has to be specific to that home, and we have to prove it. So, and I'm a VA appraiser, so I like how VA does it. They make us in our report literally do the math. Here are the sales. Here's the median sale price of all of these sales and what those sales were, and do the math on how we came up with that time adjustment. We can't just pluck it from air, that time adjustment. We have to be very specific.
Now, recently this year we had lumber go up crazy. So all of a sudden new homes, they had to adjust maybe for an extra $30,000 to $60,000 of cost. Yet you don't have the sales data yet because you've got the old values at the old lumber cost. How did you bring those two things together?
It was, for us, it was almost impossible because we have to have that data. Again, our appraisal process does not allow for that kind of adjustment. I guess I could see putting an adjustment in there. I don't know how underwriters would react to that being acceptable. New construction's been the toughest. It's been very tough. What's very helpful is when the agent will sit down with us or get on a phone call or get on an email and give us specific data. And this is where I like to do these kind of things. We all need to work together. We will send an email out to the agent at a new home construction development because, for instance, the lender's requiring, I want to know exactly what those upgrades cost. And 9 out of 10 times we don't get a response. So this is where we have to work together, and everybody's really busy, but without that data, our hands are kind of tied. They're not kind of tied, they're tied. So we need specifics. And that is one thing we're seeing a lot with lenders. They want from the agent or from the builder a list of upgrades, what they cost, what the difference is. And we can't just guess at that data. We have to get it from the agent in the model. So that's, if we all can work together on that and do it in a timely manner, that's where things are going to work a lot better to get those values up there.
Okay, and Karli, now with regards to what Jodi just kind of went over, what would you say, just kind of a guesstimate from your loans that you financed, 1 out of 10, half of them, 50%, how many of your transactions, either from a refinance or a purchase this last year, did you run into issues, just kind of a vague guess with regards to appraisal issues, evaluation issues?
In all honesty, and knock on wood, I mean, we've been doing, at least in our branch, pretty well this year. But when it one thing you have to remember is because people are offering to pay more, we don't necessarily flag it as being low, so to speak, because they have the ability to come in with the difference. So it's not like we had to change the transaction. But I would say probably refis are a moving target. It's very hard for us to determine value. You try to do automated valuations online and figure out where do you think this is going to land? And we take several different models and kind of put them together and say, okay, I kind of think this is where you're going to be. And we're familiar with most of the markets we're doing refis in. So we're usually pretty spot on. But I'd say we've done more disputes on refinances on value than we have on purchase. And I am sure Jodi can attest to this. It's harder for them because you're stabbing in the dark. You have no idea what's in the mind of everybody, of what they think that value is and where they got their data from, because we can't talk about numbers with the appraiser. We shouldn't because of the rules that were put in place with Dodd-Frank, and for good reason. But when it comes to the purchase side of things, I'd say, maybe 1 in 15 are coming in low. So it's not a ton, unless, there might be a handful that we already knew, hey, it's probably going to come in low. So the expectation was there. But, I can just say, for example, the house I bought end of last year came in low. And we didn't pay the difference, but it's a tough market, and some buyers have to ante up to pay the difference to get their offer accepted. And that's okay. I mean, as long as you feel comfortable about, how much you're putting down in the house, you're not putting yourself up against a wall. It does scare me a little bit when I see people doing no money down and then paying over the appraised value, because they're putting themselves in a little bit of a tough equity position in the future. But there's some properties we know there's sales data coming that there's going to be a couple more closings like Jodi was talking about. You know, there's listings out there, there's accepted offers. We can talk to those agents like, hey, they can't tell us the price yet till it closes, but they can, you know, at least say, yeah, you're justified or whatever with your price. So we know where we're going with it and the customer can feel a little more comfortable. So hopefully that answers those questions. But one thing I wanted to say, what Jodi was referencing, and we run into this a lot, is when the appraised value comes in lower, not necessarily agents we work with on a regular basis, but it might be somebody we're not familiar with. They'll come to us, especially newer agents, because they're just not familiar with how it works yet, and say, but look at all these sales. They sold for you know, 400,000 and our house is only 300,000. Well, yeah, that one is like 20 years newer and double the square feet. So it's not the same, you know? So you have to try to explain the adjustments and why that wouldn't even be considered. And a lot of times they try to count the below grade square footage. And I run into this all the time. You know, it's 3,000 square foot home with 4 bedrooms and 3 baths, but you know, 1,000 square feet is below grade and 2 bedrooms and one of those baths are below grade. Well, it's way cheaper to finish a basement than it is to finish above grade. So years ago, they separated that on the appraisal. So it's not, you can't compare, you know, the same above grade square footage of another house to one that's combining all of it together. It doesn't work out. You couldn't build it for the same price. So you got to think of it in those terms. That's probably the biggest factor I see where people have a hard time understanding. So
Good, thank you. I have 2 questions for you, Jodi, with regards to what Karli referenced on the appraised value and paying the difference. That's, you know, very common. Now that her home is closed, can you use that as her closed sale, even though she paid the difference? Is that a good comp now at that higher price?
Yes.
You can use that?
Absolutely. Yep. And we wouldn't know because the MLS and the county records are going to say the house, the appraised value came in at 250, sale price was 300. That's not disclosed on the MLS. It's not disclosed on the county records anywhere. The sale price was still 300 and we would use that as a sale.
Okay.
Karli made a really, really good point with value disputes because and that's why I say my phone's always open, my email's always open. I'm more than happy to help any agent do a value dispute so it makes sense. But throwing garbage out and not, and I love to educate agents on how this is because what I would say is keep your temper down and keep the emotion out of it because just blurting out a bunch of information and saying someone doesn't know what they're doing, it's not helpful to anybody. We're black and white. It's, you know, there's no emotion in it and it's just facts. So, and just knowing the appraisal process before you go into a value dispute and throwing out information when you don't really know, it's not helpful and you're not helping your buyer, you're not helping your seller, you're not helping anybody in the process by doing that. It's probably making things worse. So it's really good to get educated on what am I supposed to do in this situation? But the other thing I wanted to throw out, because I do this all the time, and I think appraisers don't always know that they can do this. If I go do an appraisal and, you know, I'm coming in low, but I always go back to the townhomes because they're very similar. Two doors down's closing next week. Next week, I can use that as a comp and put all my weight on it and redo my appraisal. We don't have to go out there. We can revise our appraisal based on that if it's shortly after we go and inspect the property. So we can definitely do that. And I throw that out sometimes. I'll say, hey, you know, Karli, I don't want to turn this in because 2 doors down is closing. And I was told through the grapevine it's selling for more, but let's maybe we just wait and see what that closes for, or else I can turn it in and then revise it later. But appraisers can revise after the fact if a home closes after the inspection, and it's very common to do that.
Wow, I didn't realize you could do that. I thought once it was turned in, the underwriters had to use it, but they can actually take it and throw it out and start all over again, huh?
Well, we don't throw it out. Now we have new data.
Okay.
And the same with the value dispute. A lot of times, all of a sudden I'm out there and the house next door closed 2 weeks ago, but for some reason the MLS was put in wrong. It was said it was in a different city, and it just doesn't come up in my search. And all of a sudden the homeowner is coming back saying, hey, what about the house next door? Oh, wow, it was put in wrong. So it didn't come up. So we just revise it. And again, it's the same with if a similar property closes a week or two, like again, within short amount of time after, now we can revise that appraisal and we just comment in there, new data has come to light that we didn't know about when we were there. And now the value's X instead of Y.
Awesome. Well, I'm an old dog. I've been doing this 35 years and I didn't know that you guys would be willing to do that. Now, is that just your company or is that appraisal management companies all across the country? I know you're concerned, some appraisers maybe aren't like you. Would all appraisals do that, or would they charge for that, or do they say, nope, that's it, you got to pay another $600, or how does that work?
It's to each their own. They shouldn't be doing that. However, everybody can charge what they want. And I think the problem with the entire industry, no matter if it's real estate agents, appraisers, some people are out there lone ducks and they're not speaking to the powers that be, or they're not going to in-person classes. I know this last year it's been hard, but contact your commerce department, ask the question, can we do this? And yes and no. I think a lot of appraisers say, nope, that closed the day after my inspection, so I'm not doing it. I don't know that they don't realize that they can do that. So no, I could see some appraisers going, well, no, I got to go out and do a whole new appraisal. I don't think they're in their minds, they can't do that, but it is absolutely an acceptable thing to do without going back out there, without reappraising it. It's an acceptable thing to do to revise an appraisal, as it just is. If you're asked to do it, again, for charges, there's no guidelines statewide, countrywide. Appraisers charge what they want to charge. And yeah, I can see some appraisers saying, well, if I have to revise this, I'm going to charge you for it. It just depends on how much. For sure. Yeah.
Okay. I know, Karli, one of the things that I was running into on some of my purchases where we'd have, close in 45 days, then, you do your inspection and then, you do your LE or your C, you do your various disclosures and you can get to the appraisal part and then you order the appraisal. And then we have to wait for somebody to pick up the order and then we're a week before closing and then we have to have the letter, a full commitment letter, but you can't do the commitment letter because you don't have the appraisal in yet. So can you kind of walk people through what the whole process is from I'm going to take a pre-approved loan app with you to how the appraisal is involved through the underwriting process, and then speak to what's going on now with regards to maybe being overwhelmed with regards to the appraisal industry being busy and how agents or buyers should expect and what's going to happen during the process?
Sure, certainly. So with respect to ordering the appraisal, we can't order the appraisal until we have what's called an intent to proceed, which we can't get without first doing disclosures. So they have to be able to view the disclosures before they can give us intent, even though they are telling us from day one, yeah, order the appraisal. It doesn't work that way. So we get the contract, and hopefully we get the contract right away. In some cases, agents hang on to it until after the inspection, so we don't actually know about it sometimes until later. So I would always let agents know, give that contract the minute you have it signed. Make sure you let your lender know right away. So you send it over, we start working on it, get the disclosures done, and we have 3 business days to get that done. So depending on volume, it's in line and we're working on getting those completed. Then the customer signs the disclosures. It depends how quickly they sign the disclosures and then get those back to us. Then we can order the appraisal. Hopefully by then the home inspection's done if someone chose to have one, and everything's rectified if there's anything they're working through. So then we'll order the appraisal. And we have, with our AMC that we own, we have turn times by area, by county, by city, and it's based on recent data. So in the last 30 days, this was the average turn time, the last 60 days. Like in the Twin Cities, we're doing pretty good, with appraisal turn times, but then when you get in the outlying areas is where the struggles come in. So if you're in, I don't know, Brainerd Lakes area is one that's running a little bit slow right now. And especially if you're doing government financing, you're more limited on the number of appraisers that can do those types of orders. We might be stretching out, anywhere from 21 business days out to 30 to 40 business days, depending on where it is. There's certain pockets where just the appraisers, they have vacation, they're burnt out. I mean, Jodi's been running her tail off for going on 2 years now straight. So, and they just can only handle what they can handle. And when they're in outlying areas, you have to think of it from an appraiser's perspective. If someone's an hour away, they've got 2 hours of drive time to do this inspection and potential to have to do a final inspection if something was wrong later. They have to factor that into their schedule and figure out how they're going to get comp data and things like that. So they're either going to charge a lot more to go there or stretch the turn times out, or both. So those are things that we deal with a lot in the more rural markets. But I'd say in the Twin Cities, average we're seeing is, just looking at my turn times, 10 to 14 days on average from the day we order it. But the other thing to take into consideration is when somebody is doing a contract, if there's government financing, make sure if the house is going to pass government financing. So I'll always look at any pictures I can find online of the house when we're disclosing. So everybody's aware, like, hey, you're going to have to put a railing. There's more than 3 steps there without a railing. You're going to have to scrape and paint. And I always tell them, do it before the appraiser comes so they don't have to come back because, they don't really want to come back either and do it, but it just stretches things out. And then everybody's frustrated. The other big thing is smoke and CO2 detectors on all levels. For whatever reason, this is any product, conventional or government, they're missing in houses. And so always make sure those are on and working on all levels of the home before the appraiser comes, because that's just a silly thing to get flagged for needing a final inspection on, in my opinion, because they're cheap and easy to install. So so yes, and don't write your contracts for 3 weeks.
Right.
Unless you talk to the lender first. Sometimes we can get appraisals waived. It just depends on the customer's credit score, down payment, market data. So
Awesome. And Jodi, I have a contract right now. One of my listings, we did get flagged. It's a VA contract for flaking paint on the garage and one of the windowsills. And normally I do a good job walking around with sellers and telling them that, you're probably going to get called on this or this, and let's fix it so we don't get called on it. Well, on that one, I guess I didn't see it to the extent that it needed to be done. So we're getting it done. We're getting it done this weekend. Not a big deal. Everything will close on time. We're not closing for another 3 weeks. But my question is how often do you, on a FHA, VA, and conventional, I don't know if you can break those out, but how often do you find work orders specifically on houses today? Is it half the time, a third of the time, almost never? How often do you run into that?
The big ones are the peeling paint, and it's on any part of the home, because FHA and VA, they have inspectors that will go walk around the house afterwards to to make sure we are doing our job. So it's not just, we're getting watched very closely, and we should be getting watched very closely. But it's even, the older homes inside the windowsill. I think that's one place where people, they just want that. That's not a big deal. It's the entire property. The state of Minnesota and the state of Wisconsin have said CO2 detectors and smoke detectors are a health and safety issue. 100%, every home again, a very silly thing to have to push things back and have another inspection fee and another inspection time waiting for them to come back out. Percentage of the time, it depends. Newer homes, not an issue. It's you go to the older homes, the peeling paint is the biggest issue and it's so avoidable by just walking around and just making sure it's done before we get there. And again, that was good. Thank you about the CO2 detectors and smoke detectors, because we need pictures. It's in our lenders instructions, and it's not just specific to government loans. It's conventional loans. They have to be present. It's the law in Minnesota. So they've kind of tasked us with making sure they're there before they'll close on it. So I don't really have a percentage, I guess.
Okay, well, cool. Thank you. All right, well, we're kind of in our last few minutes here. If I could have each of you talk about whatever I didn't talk about today that you'd like to share with everybody. So Karli, maybe you could start us off, talk about just whatever you want to talk about appraisal wise and how it involved in the real estate process that viewers could find beneficial.
Yeah, I think just one thing to touch on more, the dispute process, for everyone to realize that, I don't, every time somebody comes to me and says, hey, I don't agree with the value, I don't dispute every single one. So if someone comes back and says, I think it's worth $250 and it appraised at $230, well, show me the comparables that you think should be used that weren't in the report. And I'll review those and compare them to what's in the report to see if they're better or worse. Because I've been doing this so long, I know, like, you're really going to offend the appraiser if we come with this, because it's not even close to similar, and this is why. And I'll have the conversation. And we only get one chance to dispute. So if we go to dispute something and we don't have solid market data, you're done. You can't say, oh, I found another one, so then come back later, you're done. You can't do it again. So it's to prevent, inflated appraisals and pressure being put on appraisers unnecessarily. So there's a good reason for it, but I think not everybody understands how that process works. And it's tedious on our end as lenders and for the appraisers too. So we want to make sure that we're sending in a viable dispute when we send it in. So that's one thing I wanted to touch on. And then really, I think everything else that we talked about is things that would be points that I would make. So thank you.
Okay, great. And then Jodi, I'd like you to just address one thing about Karli and the comps. So I think people sometimes will say, let's say they sell a split level and that appraises for less than, let's say, a Rambler or a two-story, and then they submit or want to submit comps of Ramblers and two-stories for a split and say, oh, that's sold right down the street, but it's an apple and an orange, in my opinion. And maybe you could touch on that, on how that on different styles of homes are more expensive to build, and the above ground square footage being worth more than the below ground square footage, which, if you're going to compare that split to the two-story, maybe you could talk about that real quick. And then after that, talk about anything else that I didn't talk about.
So blanket wise, if you have a split entry or split level, it's not even an adjustment, because I think that's where people come at us going, well, what's the adjustment between the two-story and the split entry? It doesn't really matter, because I have split entry comps. So if we have split entry comps, we're not even going to look at a two-story, no matter what, because typically in neighborhoods, you have similar type homes in every neighborhood. What we can't do is choose a home that's dissimilar and adjust versus using a home that is similar. So without going into where the adjustment is, and we're tasked with finding similar homes first and foremost in that market. Very rare that we don't have them. It's extremely rare. I wanted to touch on what Karli said about value disputes, because since I've started doing any meetings with agents and loan officers, I have always said, and I will always say, take a deep breath before you make those value disputes, because I think some agents and homeowners think they're trying to convince the loan officer that the appraiser was wrong. The loan officer can't change the value. we have 15 appraisers at our company, and I make sure that we don't respond the same way. But it's hard to talk someone down after they've been insulted, even if they're wrong. So if they're wrong, a professional should go and change the value. But once you've just thrown out insults, it's hard. Everyone's human. But Karli's 100% right. Give us real data. The last value dispute I just looked at, the home hasn't been touched in 40 years, and all of the sales that were sent to us were gutted and remodeled. New kitchens, new bathrooms, new utilities. They're not the same. And they're just not the same. And for some reason, it's hard to understand that when you're on the other side, that just use this for a comp. That's illegal. So we can't do that. So just take a deep breath. And I love that Karli would be someone that explains this to the homeowners and doesn't just pass it on and vets it. A lot of lenders don't do that. And let's just be black and white and have a good open communication. And like I said, you're not trying to convince the loan officer. You have to, it should be a good professional back and forth. And hopefully agents can be that in-between person and loan officers can be that in-between person. We all need a friend sitting by us before you hit send on some emails. And everybody should have that, look over this for me and take out the emotion. That's how I always say it.
Awesome, thank you. Well, one last question, and then I'll have you, after you finish the question, just tell everybody how to reach you again, and then we'll wrap this up. Karli, where do you, and Jodi, same question, where do you see valuations going over the course? This is a crystal ball question. Where do you see valuations going over the course of the next year with regards to, again, prospectively looking at what's happened this year? Where do you see it going into the next 12 months? Karli, why don't you address that first and then tell everybody how to reach you, and then we'll move on to Jodi and we'll say goodbye.
I would have rather been after Jodi on this one. Based on what we're hearing on the mortgage side of things and just economic data that's out there, values are going to continue to climb, but they're going to level off, not at this rapid rate that we've been seeing. It's just not sustainable long term. We're in a market that, just like when everything, not that we're going to fall apart, but back in 2008, it was a time like no time before. We're in the same thing right now, and there's so many unknowns with COVID, and we don't know what the future holds. But I'd say we're probably going to continue to see that average 3% appreciation on homes. So I don't think people need to worry about deflation, where their house is going to depreciate in value, like we saw these drastic declines because of foreclosures. There's a moratorium on foreclosures and evictions and things like that, but we're not going to see this massive herd of foreclosures happen. Lenders and servicers and the government are already trying to help people. So I think it's different than anything we've seen before. So we're not going to see that mass amount of people that are going to be listing their homes on the market because of foreclosures or short sales or anything like that. Will we see some more? Yeah, but there's so much pent up demand, it's going to be gobbled up anyway. And there's still going to be people fighting for offers. We just probably aren't going to see like these huge bidding wars like we have seen in the spring. But, we're probably going to start it over again next spring because, again, there's demand. A lot of people dropped back, at least even ones I've been working with. Same thing that happened last year. We saw some frustration. The buyers are just like, you know what, I'm tired of putting bids on. I don't want to overpay anymore. I'm just going to hold back for a little bit. They'll come back in the spring market strong again, and they'll be ready to swing. And so we'll see some demand again happening. So I think we're going to see a couple decent years yet in the market, but not as drastic, I think, as what we saw this spring.
Thank you. And how can we reach you, Karli?
Yeah, and you can reach our team, 651-888-8180. That's our team line. You can talk and text on that line. And then Website is www.thesparteam.com, and John will have that posted so you can get the spelling.
Absolutely. Thank you very much. Jodi, would you like to tackle that question?
Well, so it is really a crystal ball moment, because all of what we do it's politically driven, I guess. Interest rates, we don't really have that crystal ball. One thing that's different that I noticed from 2007, 2008 is more people have more cash in their homes. And that is the huge difference. And thank God for that, because they have more to lose by walking away. I don't know. I can't. I'm with Karli on the fact that this is not sustainable. That values go up this drastically. Our incomes are not going up enough to meet that. It's gonna level off. And from everything I've read and listening to podcasts and what have you, real estate is still your best investment, and as it always has been. So yeah, I think it's still going to go up, but I don't think we're going to see the drastic values going up like we did this past year. It's been unprecedented, and just like COVID, when nobody thought this would happen, but yet here we are. So I don't have a long forecast, but I believe the next year or two are still going to be good. Past that, I'm not quite sure. And I think at least this market, we've done a better job of that was done in 2007 and 2008, with people needing to have some more equity in their home to purchase it. And then they seem to have it. So it's been a really good, it's very much more positive. And I'm curious to see what happens after the moratorium's over, because we don't really know that side of what's going on there right now. At least I don't. So we just kind of roll with it, and as we always have to. I don't have the whole crystal ball thing. I thought when COVID hit, I did see a lot of people pull out of their offers, and then it came right back. So I was a little stressed there, and it seems to have, we've done a good job of keeping things in a good place.
Awesome. Thank you. And how can people reach you, Jodi?
Our office number is 651-493-4820. My personal cell is 651-226-4787. We have a website, which is www.jrappraisals.com. And my email is Jodi, Jodi, @jrappraisals.com. And always open for questions. It's a fun job.
Awesome. Awesome. Well, thank you both. My prediction is I agree with both of you. I think the market will kind of level out. I think the millennial demand is going to be huge going forward, and the boomer demand is not, or the boomers aren't downsizing enough for the demand that's there. So I think that'll keep the market relatively strong as long as there's that supply and demand imbalance. I don't see the double-digit returns sustaining itself either. I see more of a traditional 2 to 4%. I've been selling homes since 1986, and I remember the early 90s. That was kind of the deal, 2 to 4%. And if you bid 5,000 over in a multiple offer, that was a big deal. This level of bidding right at the moment is something unprecedented, in my career as well. Well, thank you again, everybody, for watching and listening, and thank you both for participating. And these are the two experts that I would recommend for mortgages and appraisals. So contact them. They'll do a great job for you.
Thank you.
Thanks.